Good morning and a very warm welcome. James Preston with you for Kalkine TV, live from Sydney, and this is the Global Markets Roundup. Let's dive into some key highlights and happenings from Friday, starting with the US market. Global equity markets dipped on Friday, while the US dollar gained as rising consumer prices bolstered expectations of interest rate hikes, even with data showing solid growth in US consumer spending. The MSCI World Equities Index, which tracks shares in 50 different countries, dipped 0.25%. Benchmark US indices closed the week flat on Friday, October 29, weighed down by losses in technology stocks as inflation concerns rose after the latest government economic data. The S&P 500 was up by 0.19%, while the Dow Jones fell 0.25% and the Nasdaq Composite rose 0.33%. Also, the small cap Russell 2000 was down by 0.03%. On Friday, the Commerce Department said consumer prices rose by 4.4% in September year over year, the fastest pace since 1991. Consumer spending also increased in the month, rising by 0.6% compared to 1% growth in the previous month. Communication and healthcare stocks led gains on the S&P 500 index on Friday. Real estate and energy stocks were the bottom movers, and 6 of the 11 stock segments of the index closed in green. And now it's time for a very small break, but stay tuned as I'll be back with UK and Australian market updates in just a moment. Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV. Thanks for joining us. I'm James Preston and you're watching the Global Markets Roundup show exclusive to Kalkine TV. European equities ended flat on Friday as a jump in major financial stocks driven by surging bond yields offset weakness in high dividend yielding sectors and commodity companies reeling from a slide in oil and metal prices. The Pan-European Stock 600 index closed 0.1% higher, but it notched a gain of 4.6% in October, marking its best month in 7 and recouping all of September's losses as strong third quarter earnings reports drew in investors. London shares ended in red on the last of October, with the FTSE 100 failing to touch the positive territory throughout the day. However, the losses were contained below 0.8%. Following a flatter Wall Street opening, the index pared a considerable chunk of losses in the terminal trade. The FTSE 100 ended up down by 11.9 points, or 0.16% from the previous close. Japanese shares reversed course to end marginally higher on Friday, as optimism around domestic corporate outlook outweighed investors' caution ahead of the country's general election. The Nikkei share average edged up by 0.25% after losing as much as 1.2% earlier in the session. For the week, the index inched up by a total of 0.3%. China stocks closed up on Friday as consumer staples, information technology and healthcare firms all gained, while the real estate sector witnessed its worst week since February 2018 on a planned tax scheme. The blue chip CSI 300 index rose 0.9%, while the Shanghai Composite Index gained 0.8%. South Korean shares posted the sharpest weekly decline in 3 weeks after ending more than 1% lower on Friday. Weak economic data and recent earnings at home and abroad pointed to supply chain woes that may further weigh on the economy. The Kospi ended down 1.29% at 2,970.68, extending the declines to a third straight day and logging the sharpest decline since October 12. The Australian share market may start the first day of this week on a positive note, with domestic technology stocks expected to track solid cues on Wall Street, while weaker iron ore prices are likely to pull down miners. According to the latest SPI futures, The ASX 200 benchmark fell 1.4% on Friday. Looking at the commodities and bond markets, and US Treasury yields dipped from earlier gains, dragged down by concerns over rising consumer inflation for September that further stoked expectations of aggressive monetary policy action from the Federal Reserve to combat the surge in prices. The benchmark US 10-year yield traded down at 1.5539%. The dollar index continued to rebound from prior day losses on news that the Fed's preferred inflation measure showed prices continuing to rise faster than its 2% target. US dollar futures index increased by a total of 0.85%. Oil prices have also risen. US crude prices rose on expectations that the Organisation of Petroleum Exporting Countries, or OPEC, and also Russia and their allies would maintain production cuts. Brent crude rose 6 cents to settle at $84.38, and the West Texas Intermediate crude rose 0.9% to trade at $83.57 a barrel. Gold prices fell off a surging US dollar weighed on the price of the precious metal. Spot gold dropped 0.9% to trade at $1,782.39 an ounce, and US gold futures fell 1.3% to US $1,783 an ounce. And in terms of newsmakers, Westpac reported a cash profit of 5.35 billion Aussie dollars in the 2021 financial year. It also announced a 3.5 billion Aussie dollar off-market buyback. Seven West Media has entered into an agreement to acquire Prime Media Group for 121.9 million Aussie dollars. Linus Rare Earths has entered into an agreement with Japan Australia Rare Earths, and the deal allows Linus an extra 5 months to pay interest of 11.5 million US dollars. The Australian dollar was testing 4 months high on Friday as investors piled into bets that interest rates could rise as soon as April, hammering bonds and sending yields soaring to peaks not seen since 2019. The Aussie dollar stood at 75.46 cents, having breached resistance points overnight. It was up 1% for the week so far, eyeing the next technical target of 76.16 cents. Alright, well that's all for now. Stay tuned to Kalkine TV for the latest market updates, business news and exclusive interviews. I'm James Preston, signing off for now.